Hello and welcome to another episode of Fintech Focus TV with me, Toby. Today, I'm utterly delighted to be joined by Tobias Sproehnle from Moorgate Benchmarks. Tobias, how are you?
I'm pretty good. How are you, Toby? Thanks for having me.
Oh, it's wonderful to have you on the show. Thanks so much. And listen, I've been really excited to have you on because we spoke a couple of weeks ago and I found out a little bit more about the business and the ecosystem that you're living in with a few of our previous guests as well. And I think you're doing some really exciting stuff, and it's a business now that's been running for what about just under two years.
Correct.
In earnest at the back end of last year. But for those who haven't heard a little bit about Moorgate Benchmarks so far, can you give us a bit of background and tell us a little about your journey, yourself, and the company?
Absolutely. Thanks, Toby. Let me start with my personal journey. So my background is fixed income and credit derivatives. I entered the world of indices in 2006, joining a small company in Frankfurt. It's called the International Index Company, which in 2007 was taken over by Market, which was Market's start into the index journey. So I was responsible for their credit and structured credit indices there. Really interesting time navigating these indices through the 2008 financial crisis, because the role of the index provider there was not your usual index provider role where you provide an underlying for investment or trading tools, but really we organized the marketplace, right, from A to Z together with Vista. So quite interesting times. At the end of my time at Market, I was responsible for Market's fixed income offering under the iBox brand. Left Market 2014, had a very short stint at FTSE, running their fixed income indices, and then went over to Thomson Reuters, running Thomson Reuters benchmark business with interesting things like LIBOR at the back end before we handed it over to ICE, and the WM FX rates. Left at the end of 2016, beginning of 2017, and after a period of recalibrating and thinking, do I want to stay in the financial industry or not? I met my co-founder, Gareth Parker, and Gareth and I always had discussed and met on the conference circle and discussed about the fact that there's so much disruption going on in the financial industry. But the index industry, which is at the heart of the financial industry and is really such an integral part of the financial industry, it's never really been disrupted, right? It's a couple of big providers who make the majority of the revenues and dominate the space. But if you really want to be innovative in that space as a product structure, you structure an investment product or if you structure a trading product, you don't really have a lot of choices, right? And the existing providers are not really incentivized to be flexible. So we said we're going to make a change and make this happen.
And that's where it comes from now. So that's a bold move, right? Because you're there against a business, and you told me this statistic just now that the sort of big four are responsible for about 85% of the revenues in the space. That's extraordinary and challenging to go up against that. And I know there's always been various monopolies across the financial services sector. It's difficult sometimes to go in there and get the purchase and the trust of the end users to do that. Have you managed that?
So we managed that by doing a number of things. One is we are different from a technology point of view. We really have a scalable, flexible, and fast technology, something which the incumbent providers don't have because they are not really incentivized to do that. Why would you do that if you're operating at 70-80% margins and really have a very nice way of monetizing intellectual property, which some of them have created 10-20 years ago. Yeah. So we make a difference from a technology point of view. We also different from a commercial point of view. If you look at the index industry, some of the commercial structures there are really, I wouldn't say insane, but really crazy. I mean, you have index providers out there where you pay up to 12 times for the same data point, right? A lot of the creativity of existing index providers has really gone into really how can we get more revenues out of it, out of the same IP, instead of how can we help product structurers innovating in that space, right? And that's where we come in, where we have a very transparent pricing model, a very fair pricing model, but really we provide product structures, the tools to innovate.
And that's quite often where this disruption comes around. If you're looking at two things there, to paraphrase what you said, it's technology that adds more benefit to the end user and cost. And if we're looking at the moment about two tailwinds that are really important to people, you're probably looking at those two things as being right at the top of the agenda. Is that what you're seeing at the moment?
Oh, yes, absolutely. I mean, we're seeing two things. One is, and that's no surprise to you, fintech really be getting more and more relevant in these times, right? And that's not only because people want to go into new areas, and then they want to go in there fast, or because people want to save costs. What I'm seeing is value for money gets really important for people these days, right? I mean, in the last 6 months, personally and from a business point of view, a lot of people really said, what do I get for what I pay? Right. So we see that more and more happening. What we also see happening, the index business being a very sticky business, right? And for years, buy side and sell side has said, oh yeah, we're doing quite okay with the likes of S&P or FTSE or MSCI, and there wasn't really a very big incentive to change providers. We've reached a certain pain point where a lot of these customers say, well, no, we're not doing it anymore, right? It is a painful process to change index providers, but we're going to do this, right? So to a certain point, we're benefiting from a situation where the existing providers have overdone it to a certain extent.
How do you create that sort of heat? Because as you say, look, one of the big issues around those large enterprise companies is it is so difficult and expensive and challenging and dangerous to an extent to get rid of legacy technology. How are you what's the catalyst to allow people to make that change and to jump over to a Moorgate Benchmarks and something which is more innovative?
I mean, if you take a step back and look at indexing, it's not rocket science, right? It's data in, averaging data out, right? Probably my IT and my R&D guys would kill me if I would tell them directly. But at the end, at the end of the day, it's getting together baskets which are underlying for investment or trading tools, right? And we're simplifying that whole process, right? We're thinking of that whole value chain in 3 different categories. It's designing indices, administering indices, and calculating indices. So designing indices is really taking an idea and really running with it to the point where it can start to be calculated, right? And we're working with a lot of different players there, buy side, sell side, exchanges, completely new players in the space who really have an idea, but don't really know how they can bring this idea from the idea stage to the stage where the indices can start to be calculated. I mean, one good example is our most exotic client, for example, is Airbus, the aircraft manufacturer, who last year came up with the idea of creating a marketplace where you can hedge revenues from passenger flights. Quite timely now, with revenues from passenger flights quite volatile. Well, some might say that it's not very volatile, but they said, well, wouldn't it be great if we would give airlines and airports and all the people in the value chain the ability to trade these revenues? Well, we need indices for that. Right? So we came in and we helped them designing the indices, but also in the administration and governance. So it's a very wide field of players who really build on our design expertise. And then we do administration. So that's the boring stuff you have to do in the day and age of regulation, right? Where we basically take away a lot of burden of the providers, and then we do calculation. What makes us different really is that we really, other than the big index providers, we really offer these things as modules, and we offer them in a very flexible way with a very transparent pricing. And that's how we crack the code. I mean, it's really something which our competitors don't do in that way, because they are mainly the big behemoths who really have that model where they say, okay, these are off-the-shelf indices. We do a bit of customizing maybe if you're big enough and if you pay enough. But really, the people who say we want to innovate, can you help us? They don't really have anyone to talk to.
Mm. Innovation is one of those words that's thrown around a lot at the moment, and it's probably one of the TION words that we're hearing a lot at the moment, alongside transformation and everything in between. Innovate, you know, with products such as yours and people who have that appetite, and there's a massive appetite right now for innovation and tech innovation and advantage and such like, probably more so than any of the 20 years that I've been looking at the industry and helping the industry. What does innovation mean to you, and how do you help companies harness that?
So innovation means two things for me. One is a different approach, right? Other than what I just described, what the index providers do, that they always will push you into the off-the-shelf products.
Yeah.
We really say, how can we help our customers innovate? Right? Whether that's other index providers or product structurers, where we sit down with them and say, okay, here's where you are, here's where you want to go. We basically tailor our approach, right? So so I think that's an important thing. The second thing is technology, right? I briefly touched on it earlier on. If you look at the technology in that space, there are exceptions, but the majority of providers really operates on legacy technology, which hasn't really been refreshed for 10, 15 years, and things were bolted on and changed, and that makes them very inflexible. We are in the fortunate situation that as one of the very few index providers, we were at the stage last year where we could take that step back and really build an index system from scratch, right? Where with the help of the Series A financing, which we did in August last year, we really had the firepower to build that system, and trying to avoid all the mistakes that we ourselves have done over the last 20 years. So we have a combined expertise of 80 plus years. So we made a lot of mistakes over the last 20, 30 years. And that's how we're different, right? Really building a scalable, flexible system, technology driven. When I say technology driven, I mean a lot of these systems really need a lot of manual interaction. That when you build that system from scratch, you basically can automate 80-90% of these processes.
Yeah, tech driven and bespoke are I think really important words there, and it allows that flexibility to gain advantage. You speak, you know, sort of staying within that sort of remit a little bit. You were over at one of the massive companies in the space for a long time, and were hugely successful over there, over at Thomson Reuters. And now you're in a situation where you're one of the little guys on there, and you know, punching way above your weight with it. Tell us a little bit about the differences between those two roles for you, because it's now they're in a completely different thing, needing a completely different set of skill sets. How's that worked for you, and how have you adapted from going to somewhere where there's such a name and a reputation behind you, to now having to do a different story and compete?
Yeah, a very interesting question. I mean, it is different and it isn't, right? I mean, during my career, I always saw myself as a business owner or entrepreneur within a big corporation. And in some companies that worked, in some it didn't really work. But I always felt that my area, and I always built index businesses. I always felt these were my little enterprises, right? So that is no different, right? Apart from the fact that I now own a certain chunk of that enterprise, that doesn't really feel different, right? And it's interesting. A lot of people say to me how I've changed in the last 2 years, right? And why I haven't done that earlier. And in hindsight, I have to say I should have done that really earlier. I mean, what's different? I think it's all positive, right? Which is different, right? Because it's what I've done anyway in the last 20 years within big corporation. I now do under my own terms.
Yeah, well, which sounds like fun, and those terms seem to be working for you as well. There's an important word you use there, which is positive, and that's something which I think just screams off every conversation I've had with you so far. Positivity is one of my favourite things. It's why we set up this show in the first place. Right, we wanted to speak to loads of people all the way through this crisis, and basically put a positive spin onto all the negative press that's out there. That's been our sort of modus operandi. And I appreciate there's a little bit of empathy that's needed to be shown, because we're in a terrible situation across the globe. But at the same sort of stage, it's very, very clear to me that there's been a lot of opportunity and a lot of chance to make a difference and to come out winning from this, which is exactly the sort of approach that you've taken to it. There's an overused quote at the moment that we spoke a little bit earlier about and debated the origins of, but never wasting a good crisis seems to be exactly the way that you've looked at this. But for a business that's sort of started in earnest at the start of 2019, to have gone through the shenanigans of Brexit, which we continue to go through on a macroeconomic scale, everything that's going on across Asia and America at the same sort of time, economically and socially. And then this pandemic that comes along behind it. What a time to kick off a business.
Oh, absolutely, it's fun. Fun times too. Yeah, I mean, look, it's very disruptive. Well, I wouldn't say it's disruptive, but it's really two quite big events to be hit by as a company who's really only been around for around 2 years. In terms of Brexit, I mean, me personally, the accent will give it away. That meant that I had to jump all the hoops and get a British passport in addition to my German passport. As a company, that really means we, in order to serve our customers or continue to serve our customers post Brexit and post the transition phases, that means we need to have operations in the UK and in the European Union. We need to be regulated by the FCA. And we need to be regulated by soon BaFin in Germany. That means double the effort and double the costs, right? But it's also a chance, right? To quote whether it was Churchill or Rahm Emanuel, who said, "Never waste a good crisis." It really opens up your opportunities, right? Because you have a wider range of potential customers. Some customers need your services in the UK and in the European Union. So I think for us, it was really important to not focus on the challenges, but focus on the opportunities. And that was the same way that is the same way that we handle this crisis that we're in at the moment. We were quite fortunate that we just had closed our Series A offering, so we were very well capitalized. And at the start of the crisis, we were still in a mode where the pieces of the puzzle were slowly coming together. And then we always said we're going to come out of this crisis stronger than we went in, and here we are 6 months into the crisis. We are indeed stronger than we came in, and there are a number of reasons for that. One is really the positive attitude. I think it's really important to stay positive. I mean, with all the news that we see every day, and then everyone around us, or a lot of people around us panicking, I think the number one thing is really is really to stay positive. Appropriate or not, I have a sign here on my wall which says keep calm and carry on. But I think that's the right approach, right? You really need to stay positive. More importantly, I think really being focused, right? And I think what we've seen is that crisis really forces us to focus, and I think that is really important in the stage that we're in, because no surprise for you, in the stage we're in, that there's a massive risk that you get distracted and you try out a lot of different things. And I think what that crisis taught us is really to focus. And there's one last thing, which is a very positive thing, which is a result of the crisis, which is people questioning the value for money they're getting, right? And us operating in an industry where I would argue a lot of people don't get proper for money, that is driving change, and it's driving change into our direction.
I love that. It's so refreshing to hear it, and every time we've spoken, I've just felt sort of a sort of wave of optimism that comes through from it. It's a brilliant approach to to be taking through all of this. You mentioned there that the sort of importance of focus and sticking to your niche. We've seen a lot of debate about is this the time to pivot? There's a keep calm and carry on, or lurch around and make sure you find solutions to it. There's two different schools which are and there's successes and failures on both sides. There are people there who are dogmatic and stick to their guns when potentially they should be doing something different, and there's people who are pivoting when they should be sticking to their guns at the same sort of stage. What's your take on why that sort of focus is so important, as opposed to is it different strokes for different folks?
Yeah, it really depends, right? I mean, yes, we got very focused, right? But we also got more flexible, right? Even more flexible, I should say, right? Where we do regular sessions on a board level, where we sit together and say, are we still having the right approach, right? How is the industry changing? How is the economy changing? And do we still have the right approach? So I guess my answer, it's not a straightforward answer, but it's for some things we really stick to the course, but for other things we really question ourselves and we say, are we really on the right track?
A questioning organisation, I think, is really important at times like this, isn't it? Just to sort of constantly sense check it. And you mentioned there the board, and you've got a good experienced team. Both of those, a supportive board, the right sort of money and investment at the right sort of time. So there's an element of luck around that to an extent, but also then the right advisors. And you've got a good stable around you there as well, haven't you?
Yes, absolutely. And I mean, the investors which you brought on board in August last year are ETF Securities Capital, and what these guys are doing is they're funding a range of companies in their portfolio all along the passive investment value chain. And that's interesting from a number of different areas. It's one that really we have operational synergies where we share operational resources in HR and finance and the marketing side. We share an office together, so we created our own WeWork, which no one is in at the moment, unfortunately. And we're starting to see the strategic synergies, right? Because we all work on the same value chain. There's loads of opportunities to really work together. Purely from an investor point of view, yes, absolutely. It's a great team. It's a very supportive team, and I think that is very, very important in a crisis, right? Not only having founders or co-founders who complement each other, right? And who really bring different strengths. And with Gareth Parker and Mark Broller, I have two co-founders who really have completely different viewpoints, but we complement each other, what we think perfectly. But also that your shareholders really are ones who really create sounding board and support you in that phase.
So good team and good, yeah, good board to support it. Let's get the crystal ball out. So we're now just about to start October tomorrow, so very end of September. We've been told that this disruption is likely to go on for for 6 months and bunker down a little bit. So we've got 2 more quarters potentially to come of this, and of course potentially more with no one really being sure about what happens. What's that mean? What's that mean for financial technology? What's that mean for you? And where, staying on that positive theme, how's everyone going to come out? How's the industry going to come out of this stronger?
So I'll start with us as a company. I mean, we co-located in London and Frankfurt. So Frankfurt is where our IT and operations center sits, which is fully up and running again. So we really, with all the measures and with the fact that Germany dealt slightly better with that crisis than us here in the UK, we fully reopened that office. So it's business as usual on our IT and operations side. Here in London, where our headquarters is, most of us work from home, but that works brilliantly, right? I was very skeptical at the beginning, because especially in the phase that we are in, I thought it's pretty important to really be in an office together, really have the camaraderie and really have these short distances to really throw ideas around. But we brilliantly managed to really transfer that from a physical into a digital world, and I think we're closer together as a team than we were when we went into the financial crisis, and I don't see that changing. As an industry, as I said earlier, I think people will focus more and more on value for money, right? And we're seeing that every day at the moment. After the first couple of weeks and months, so people really got used to that mode and where it got easier to do business again. I think we're now coming into a situation where people say, well, the crisis will go on longer, right? So we'll get on doing what we plan to, right? So I think there will be change, will be possible, and change will be likely, and it will be more likely in some areas than it would have been without a crisis, right? So for us, it's a long way of saying we stick to our plan. We think we're different, and from the customers which we get from the door, we get that confirmation every day.
Good work. And value is an interesting one, because immediately when you think of value for money, people are talking about cheap. I get the impression you're not talking about that necessarily, is it? Value for money is dressed in many different boots. It's not just about being cheaper. It's about adding value to, that's my view of value for money.
I think that would be the right approach, or the wrong approach, just to be a cheap provider, right? What we're doing is we're faster, we're providing better quality, we're more flexible, but at very reasonable prices, right? I mean, we're not the low cost provider who does things cheap and dirty. It's the complete contrary, right? With the skill set we have in house, and with the technology we have in house, we're better, more flexible, and faster.
So exciting times and compelling reasons to be signing up with Moorgate Benchmarks. Who should be talking to you at the moment? Who are the right sort of companies to be reaching out to have a conversation with you, who might be watching this at the moment? And what's the best way of them getting in touch with you, Tobias?
So LinkedIn me. So we're very active on LinkedIn as a company, and me personally. So you will find me and all our staff on LinkedIn. So that's the best way to get in contact. And after this crisis is over, come and visit us in 55 Basinghall Street. Who knows when that is?
Hopefully not too far off. I mean, if we can follow the Frankfurt rule, hopefully not too. Well, just to close off on this, as a matter of interest, I know you've been back to Germany recently. Tell us a little bit about the differences between how Germany have dealt with it, and what you think the British government can learn from that to improve.
How much time do we have? No, I mean, look, bottom line is, I think Germany started from a completely different stage, right? In terms of the system there, and in terms of the preparedness, the level of preparedness. I think they started off at a different level, to be fair. But I think what has happened is that they really made very fast and sometimes very painful decisions to go into a lockdown right away. And also during the lockdown, the decision making process was faster and much clearer. I should say it's not without any discussion, right? I mean, there are a lot of protests going on, and then there's a lot of public discussion. Was it the right way, and how do we get out of that lockdown? But I think it was just the way it was tackled, the way it was also communicated. I mean, what I often lack in the UK is really a clear communication on why were certain things done, right? And I'm not saying it's easy, but I think making clear decisions and communicating that in a clear way is what the biggest difference is. And by the way, that's essential for a startup like ours as well, right? If you really want to have all your people going with you on a journey, it's basically making clear decisions and communicating them in a very transparent way.
Yeah. And there's so many different interpretations of every bit of communication as well. It's the art to get right, isn't it?
Absolutely. It's really an art more than a science.
Well, Tobias, listen, it's been an absolute pleasure. As I said, look, I've come out of this positive, enthusiastic, encouraged. It's been inspirational chatting to you and hearing about the story. I've got no doubt that evolution and breakup of the big four isn't too far away with what you guys are doing, and that monopoly soon to be smashed. It is excellent and just uplifting to hear of a business like yours who has done so well over its incarnation so far. So thanks so much for coming on it. Thanks for being so generous with all of your insight and thought process as well. And it's been lovely having you on the show.
Thanks for having me.
Absolute pleasure. Thank you all for watching, and we'll see you soon on another episode of Fintech Focus TV. Thanks a lot.